Arun is saying, hi Dean, you were telling psychologically puts are priced as higher than calls because of fear of falling is high. Sometimes same strike, but calls are priced high. What can we take note from it? Well, it will happen rarely. Calls being priced higher. Couple of situations where I think it can happen is let's say you have a news, all right, that you are anticipating and you're quite sure that the news is going to be bullish, right, for the markets. If you are quite sure about this, so market is in a range because you have news event at this point, you know. So as the news is announced, market is going to go higher. If this is the scenario which you think is most likely going to happen, then the retails will be buying calls, all right? And those who are selling calls to them, they will try to factor in the risk of market going higher, and they will charge higher for the calls, all right? At the same time, what will happen is lot of people will be selling puts, okay? So if they are selling puts, then the put premium drops. And if they are buying calls, the call premium rises. And in that situation, you can see the reverse happening, that calls are a little bit costlier than the puts. But again, the psychological part holds most of the times. But yes, obviously, like if you believe that the market is has higher probability of going higher, and that too in a dynamic fashion, then definitely the calls will be priced a little higher. But it will happen rarely.